Thank you guys so much for joining us. We've got five guys here who I think you've got a lot that you can learn from. So I'll maybe just start with introductions. We can start at the end. I've got a few questions, but I'm hoping that this will be somewhat interactive. I think for one, I've seen the entire independent sponsor market dynamic change over the last 7, 8 years. I remember going to independent sponsor conferences in 2017 where folks didn't really know what that was. And today, with the introduction of big institutional investors coming to these conferences, being introduced to this market, I think you're seeing it rapidly develop and evolve. Even the words independent sponsor, I think, are a sort of poor way to describe what I think is a very varied and differentiated market. There's folks who have more operating backgrounds. There's folks who have more private equity backgrounds. There's folks that are doing search funds. The capital partners that are most relevant for these kinds of folks are necessarily going to be different. And so I think it'll be really interesting to hear from everybody here and start to differentiate and segment where people sit within this entire dynamic. And hopefully that'll make this market a little bit more efficient. So Ignacio, do you want to maybe start with a quick intro, and then we can just go down the line?
Sure. Hello, everyone. My name is Ignacio Macias. I'm based out of Palm Beach, Florida. I'm an independent sponsor in the healthcare industry. I usually invest 50% of the equity in the platforms that I do. And I'm laser focused in rolling up business services for healthcare practitioners. I just finished optometry. I'm doing now dental, vets, and hospital supplies. Thank you.
David Ishagian of Panther Equity Group, West Coast-based independent sponsor, spending all of our time primarily in IT services, tech-enabled services, and B2B.
Hey everyone, I'm Darian Smith, based in Miami, Florida. President DK Smith & Co., independent sponsor, industry agnostic. I come from a legal background, so a lawyer by training, and yeah, excited to be up here.
My name is Brandon Pettigrew with Stonehenge Capital. I'm based in Birmingham, Alabama, but my offices are in Columbus, Ohio. We are a boutique capital provider focused on impact investing. We take a fund strategy, so we have an SBIC, and we have several state-targeted funds as well. Double bottom line investor. Glad to be here.
Hi, Vinay Bacciaretti, independent sponsor, partner at Weave Growth. We're a Silicon Valley-based independent sponsor. We focus on business services, healthcare, and e-commerce, and we always try to bring a technology and automation angle to each of our deals, as well as kind of a buy and build strategy where it makes sense.
Awesome. Darren, I may start with you. So, when you think about building a strong pipeline of deal flow, it obviously starts with a strong network. And I think there's a lot of different ways that folks build strong networks. I assume that you're not going on LinkedIn and just clicking on friend requests. So walk us through what you do that's different and more potent in order to drive your sourcing strategy.
Yeah, great question. So, it starts with kind of the types of companies that I'm looking to buy, right? And I'm looking for strong management teams, looking for, owners who are, not at retirement age, but maybe wanting a growth partner, right? And then working backwards from there. So leveraging, my professional background, going to events that are, where most, if not none of you are there. And so, it really starts with the lawyers, right? The accountants, the QOE providers, the wealth managers, right? And just really building a pipeline and just telling them what you do. You're like, I'm an independent sponsor. Half the time they say, what's that, right? And the other half, they're like, okay, how can I be helpful? Because for them, if I can help their client get liquidity or help their client get a deal done, they benefit as well, right? So it's really this mutually beneficial relationship. And so understanding how to, approach those types of intermediaries without being salesy or anything. It's just having them understand what you do, and more likely than not, they're willing and open to be helpful.
Vinay, I know you've got a couple different ways that you think about sourcing. Part of that's obviously building a network. Can you maybe talk about what you do and what you think about?
Sure. I think you have to use every possible sourcing method to get deals because it's not easy. So going through to bankers to industry brokers, and then obviously proprietary sourcing. And the way we approach that is we generally develop an investment thesis on a specific industry. We do a very broad outreach. And I think the important thing is here, obviously, in all these one-on-ones, you're thinking about kind of your pitch, your story to capital providers. But equally as important is your pitch to the business owner. And you have to be able to communicate that well, your value proposition, not only to the business owner, but also to the intermediaries, so they can communicate that to their clients. So I think that's a very key point in kind of successfully sourcing deals.
Thanks. And so David, as you're starting to craft this story, what sorts of things are you highlighting within your strategy in order to convince capital partners to come in?
Oh, on the capital partner side? On the Panther side, what I think we like to tell capital partners is we're not looking to have more than 3 portfolio companies at a time. And I think that really shows a dedication to building out each platform investment. And I think that goes beyond just saying we're going to be hands-on. We do that by showing our network of people within, let's say, CFO focus, a marketing focus, CIO, engineering. Given a lot of the stuff we do in IT services, it's showing and flexing our operating resources and bench around the table that A, can free up the capital partners side to not be overly involved on the portco, but B, to also show trust and comfort that you're going to execute on your thesis. So I'd say, to sum it up, showing that we can do more beyond the deal and doing all the work post-deal, and showing that with resources, industry relationships. And then I also think, just in general, on the capital partner side, it's best to have the first time you're talking to someone about a deal not be the first time you're meeting that partner, right? I've seen some independent sponsors that they'll reach out to me thinking I'm a family office or SBIC asking for dollars. And I get the spray and pray approach, but the issue is already you're going to be losing credibility. So I think getting those opportunities at bat, whether the deal is going to go to LOI or IOI or not, but building those reps in with capital partners, they see how you think. They see how you think about a sector. They see how you mitigate risk, whether it's a deal structure or tactical things post-closing. So it's both, Eric. It's a bit of specific for that deal, but that mindset of really showing you're not looking to do a quick deal. You care about your brand, long-term focus, and putting in the work with the relationships really goes a long way.
So, Brandon, you just heard 3 different approaches to network, pipeline. How do you talk to capital partners? You write checks to guys like this. How do you start to poke holes in some of the stuff that they're saying on this stage?
I mean, I concur, especially with what you just said. Credibility is very, very important when we're talking with independent sponsors. I mean, we really listen to what their investment thesis is. We, obviously, even if it's their first deal, we want to at least understand their background, want to know, what they're bringing to the table, because this is a relationship business, right? So even if we're not able to do something on that first deal, if we like the way they think, we like their investment thesis, we're going to stay in touch because we definitely would like to do a deal with them. And so from a capital provider perspective, we're, obviously I'm here, so, I want to meet independent sponsors. That's the bulk of, the financing that we provide is for acquisitions and, even refinance opportunities and things of that nature. But because also we are impact investors, right? Don't, mistake anything. We are capitalists. We're looking for good businesses with good management teams, with good business models, We're not sacrificing that, but we think there's more to business than just the bottom line. So we communicate that up front, and we typically find lots of people who are very supportive of that and would like to work with us because of that. And so when we find those individuals, we kind of cling to them, and we'll work with them and try to find ways to get deals done. But just like you said, it's important that when you meet with us, we're going to ask you lots of different questions about, what is your value proposition, your thesis, and that's important to us. And hopefully, there's a connection there. So.
Eric, I had a quick question for Brandon. Brandon, what would you say are the top, 2 or 3 reasons that you guys generally pass on deals not related to the deal, like related to the independent sponsor itself? I'm asking for a friend.
Yeah. So for us, alignment is very, very important. So what does that mean? Skin in the game. That's something that is extremely important to us. So there's not, let's say, a magic bullet on that, but we want to see that there is some meaningful capital coming from the independent sponsor, and it's not your deal fee that you're rolling. We want to see cash going into the deal because, look, I mean, if you're asking us to put 2-3 times of debt onto your acquisition, and you're not willing to put in any capital, oh yeah, sweat equity, I get it, but that's not alignment for us. And believe me, we've been around for 25 years. We've done a lot of deals, and it's been tried and true for us. So that may not work for everybody. I had a deal recently. A gentleman came to us. It was a great deal. Not only was he not willing to put any money in, but he wanted to take 2/3 of his deal fee out at the transaction. So I'm like, okay, you want us to put in $10 million. You're not putting in anything, but you're going to take out about $500,000 at the beginning of this transaction. I'm like, that's not going to work for us. So that's one thing. But other thing I think is, if you don't have a real clear and concise investment thesis, right? How are you really going to add value? And that's more kind of qualitative, from the discussing of the deal or, what is your whole strategy? That's really important as well. So I think those are kind of the 2 top that I would say.
All right, warm-ups are over. So from the prep call, Ignacio, I remember, I think you said the word proprietary like 3 or 4 times, more than anybody else. This is everybody's opportunity to flex. I want folks to tell stories about how their network has helped them actually do something, build something, source something differentiated in the market.
Okay, so my market is the healthcare market. So my universe is maybe 40, 50 companies in one specific market, like optometry, for instance, business services. So my job is, the best job in the world is to have new 40 friends that I'm going to follow up during the next 2 or 3 years. Let me start with what I don't look at. I don't look at companies that are owned by private equity. You guys are smarter than me. You have more information than I have. So that is not what I usually look. So I'm looking for baby boomers that are about to retire. They really care about the legacy. They know about my reputation in the market. They talk to the businesses that I bought, and they see that I really try to follow their legacy. And I really try, even if sometimes I sacrifice a little bit of the upside. But they really see a way that they can have the business, their baby, continuing. And usually these guys, they've been successful for 20 plus years. So they really look for that. So I really go into the trade fairs. I talk to the CEOs. I really try to understand what their strategy is. I write them postcards in Christmas. I really try to become their friend. And I bought 18 companies in the last 24 months. And you said, because I'm saying this number because you might say, okay, well, then it was going to take a lot of time. guess what? The reputation talks. Talk to Ignacio. Talk to Ignacio. So I really have a lot of deal flow coming in because of that, and proprietary deal flow gives you much better economics, in my opinion, 100%, and better terms with the notes too. Somebody was talking yesterday. So I will say not really a secret sauce. Say why I do what I say, and they can prove that, and that is giving amazing returns. And the last platform I did 17x in 3 years. It's a book coming out in Forbes about this roll-up, and I think it's an amazing opportunity for these independent sponsors, because these baby boomers, they will not follow a process, a competitive process. With a private equity guys or something like that. It's not like this mindset. These are more like the guys that they want. I went to Cincinnati and had a dinner for 2 hours with someone that said, I'm not going to sell the company. 2 years later, I bought the company. He called me, now I'm ready, Ignacio, let's have a chat. So that's maybe old school style.
Eric, I had a question for Ignacio.
Yeah, I do too.
All right, you go first.
No, you got it.
If you insist. So maybe for Vinay and Ignacio, because you guys both brought up proprietary. My question for you is, at what size minimum or company size minimum do you see when there's no true advisor or banker or someone helping the seller be a seller? Do they understand valuation versus I put this much time and effort and sacrifices? Because for one of our platforms right now, it's a software engineering company in Ohio, and starting to look at add-ons, and we continue to see some of these people are saying, and they're proprietary, well, I understand there's EBITDA multiples, this, but I've worked 15 years to build this. I need X, Y, and Z. So I think that sophistication of what you think you deserve and what the value in the market is probably crystallizes at a certain size, but I don't know. I'm just curious. It's hard doing proprietary without them being a little sober looking at their business. And I think when it's a lifestyle size and a little bit larger, they probably understand some of this better. So does that make sense, Vinay and Ignacio, what I'm trying to ask?
Yeah. Well, my deals, the deals that I buy are below $3 million of EBITDA. So they're not super sophisticated big deals. And you know how I go over that? Talking about what I will do for the first line of the management team. So they usually care a lot about, this guy has been with me 40 years, 20 years, and he's not going to take the money. What are you going to do for him? So I say, okay, this is my incentive plan. I really like the last speaker talking about the purchase options, things that he mentioned. I also do that. And then usually my conversation of valuations is about a number. They have a number, but you can play with the terms very well. So I'm saying, okay, you want to get this number. I don't see that happening unless, can I pay in 5 years? Yeah, well, I don't really need to do this tomorrow. You can give me 5% and pay me in 3 years. So that's how I play with that. And sometimes they're not realistic. You're right. I mean, it happens that, this is worth, like Google. Say, well, probably not for me.
Okay, that's fair.
Yeah, I think it's a good question. I think in general, everyone wants a proprietary deal, right? But I think you're essentially catching them earlier in their journey, right? If they've talked to a banker, they've been coached, maybe they've been talking to this banker for a year, maybe the banker's helped them with their financials, they've helped them emotionally kind of, let go of their business in a way or understand. They've kind of made that emotional decision when they're working with the banker. When it's a proprietary deal, you're kind of catching them off guard in a way. And it's an emotional process, maybe not for serial entrepreneurs, but certainly for people who've built their business for 20 years and where the majority of their net worth is in that business for their family. So that's something you have to work with them on, not only kind of cleaning up their books and understanding kind of all the relevant metrics, but also being sensitive to that emotional journey essentially and being a little more patient with them. So it's in terms of size, I would say in general that's true. the smaller the business, the less sophisticated they'll be. But we just, proprietarily sourced a deal that's doing 6.5 million of EBITDA, and he has advisors, but it's maybe they're not the bluest of chip advisors, but so he's sophisticated. But at the end of the day, I think a lot of it's about trust, and if you're able to build that relationship with an owner and they trust you and they can avoid going through kind of a process which will take who knows how long and get who knows what valuation, then you have a good shot at securing that deal.
We're just going down the line and proudest moments, things to brag about. David, you want to go ahead?
Oh, yeah, I'm trying to see.
There's so many things.
I'm trying to take Eric's.
I told you
goal of asking
warm-up's
questions.
over.
Yeah, no, I think for me on this last deal we closed was in October. Proudest moment was okay. 5 weeks before the deal closed, our CEO said he's overwhelmed. He needs to rethink. We had money spent or a handshake agreement with service providers to pay like, I don't know, $350,000 in closing costs across the board. And I got that email and I was like, well, there's two things we can do with my operating partner. I'm like, we can either kind of push our weight and be like, you've promised this, we have that. Or we said he's emotional, right? This is a big deal for him. Let's roll the dice and let's tell him, don't worry, take a day, take a week, take 3 weeks. This is important for you, it's important for us. I was very scared sending that email, sent the email, and like 3 days later, CEO called us and said, all of my advisors freaked the F out, my bankers as well. The only people that let me breathe was you guys, and I made the right decision moving forward with you guys. So, yeah, so that was, I think, words from my perspective. I was proud of that. Just it shows it's an emotional roller coaster, as Vinay was saying, for some of these sellers that are not serial entrepreneurs. So, I think from a non-traditional sense, that's a moment I was proud of.
So I know we talked a lot about proprietary deals and sourcing and whatnot. I'll share a story about how I really built relationships with bankers, right? Because as an independent sponsor, most of you all know if you try to go to an investment bank or a small boutique bank, they look at you and said, no, I'm not ever going to send you any deals because you can't close, right? And so, on this, this networking piece, right? Just going to events, getting business cards and going to the happy hours and the dinners, right? And all of that, I met an accountant. And she said, oh, it's an independent sponsor. And so this is what I do. Great. I have a friend I went to middle school with. I'd love to introduce you. Great. It was a very small boutique investment bank in Florida. And, the guy took me to lunch and he said, hey, what do you do? I usually don't send my deals to independent sponsors. We only do about 20 deals a year, maybe 15 to 20. But let me know what you're interested in. We'll keep you top of mind. Every few months, checked in. Hey, let's grab a drink. Long story short, he sent me a deal that was right in my wheelhouse, right, and just kind of right center of the fairway. And he said, hey, I thought about you. This would be perfect. It's actually a personal friend of mine. And she's looking for a growth partner, et cetera, et cetera. And I said, great, can you make the introduction, right? Make the introduction, and, we're under LOI, right? And so that's just, a way how this networking goes. It may seem exhausting, right? It may seem like I'm just collecting business cards. I'm just, going to these happy hours, meeting people, all these accountants, all these bankers, lawyers, whatever. But, if you take the time to make those genuine connections and really sit down and be purposeful about telling people who you are, what you do, and what your brand is, right? I think for me it worked, and it goes a long way.
I guess I can answer that in two ways. So as a capital provider, we're also seeking proprietary deal flow. So one thing that I've been trying to do is to develop relationships with diverse supplier managers at different large corporations, right? Because they have diverse suppliers that they're really trying to increase spend to. So have been able to kind of get in with a few of these folks and have had some really great introductions to some young growing companies, and we feel comfortable with them because they have a captive customer of this big, corporation that is trying to, give them money, but, or, so that they can provide goods and services to this company. But the problem obviously is, these companies, they're very unsophisticated. They need capital and things of that nature. So it's really a long-term play. So I've been kind of working with, there are a couple of companies that I got really close to, but, because they had never dealt with an institutional investor, it just scared them. Got them, sent them a term sheet. They were like, oh my gosh. They were just so used to, working with, their local bank that, when they saw what we were, proposing, it just scared them to death. So then a year later, I kind of kept in touch. A year later, we got back in touch, and they were like, you know what? We should have gone with what you guys proposed, because now that we've been out here talking with people, we thought you guys were the shark, but you guys are, were really, had our best interests at heart. And so we're still talking. We haven't done the deal yet, but that's just an example of just how, we are looking to, find good companies that have a lot of growth ahead of them. They just, need a little capital to kind of push them over the edge. But, just one other story. Literally just last, in February, I think, at the iGlobal conference, just kind of ran into, another capital provider, talked to them, just briefly say, yeah, we're impact investors. They're like, oh, well, we're kind of impact investors too. And so we just started talking. I was like, yeah, we have a fund in Utah. Like, oh, well, we're, we have something in Utah we may want to talk about. I'm like, okay, great. Come to be a whole, within 3 months, we're closing the deal, and, it just works. So that just kind of goes to show, in terms of what I do, putting out there, how we like to look at deals from an impact perspective. Found someone who was, dead on with how we look at the world. And when that happens, sometimes the world just lines up where you can, get a deal done, and it just worked for them and for us. So.
Yeah, no, I think actually we had a similar experience in sourcing a few of our deals that way, in the sense of, when things kind of line up. So I think business owners respond really well, not surprisingly, when you know their industry. And so if you can come across as, knowledgeable about their industry, but you also have an investment thesis about their industry, a vision for what the platform can be, and it aligns with what they want to do, then that's a magic formula. And that was really our first deal. That's how that happened, which was a PEO platform. We understood the industry. We had a specific vision for, the type of platform we wanted to build. And an advisor in the industry actually connected us and said, hey, we know, an owner who has this exact same vision. And so, you can't really count on those kind of circumstances happening all the time. But I would say whenever we go into a conversation with a business owner and we can speak in their kind of industry lingo, and we're very familiar with the players of that industry, it just speaks volumes, because I think the vast majority of the people they talk to don't really have an in-depth knowledge of their industry. So it's a huge differentiator.
Well, very quickly, I'm very proud of one deal that I closed last year. I went to visit this founder, and we had an amazing meeting, and we actually ended up with a handshake. I said, okay, we're doing the deal. This is the valuation. Okay. Then I went back to Florida. I sent the LOI, and he called me and said, Ignacio, I'm not going to do it. I called my competitor, and he's going to give me a couple of $1 million more. I said, are you going to match this? And I'm not doing this. But you know what? I understand, and I'm going to be here. I'm going to be just waiting. And, I'm a serious buyer. So go and do your deal, and if something happens, I'm here. I'm not in a rush. He called me 1 month and a half later. And he said, Ignacio, first, I didn't sleep in 1 month and a half because of what you said. Because you really care about the company, about the legacy. And you know what? I just broke up the deal. I even pay a breakup fee to get out of that. I don't want to close. I just ask you to do a very fast due diligence. I don't know why they do that. They've been operating for 20 years and they want to close in 1 month. I don't know, but that really happens. And we closed the deal. He never negotiated $1 more. And we're still very good friends. So, yeah, that was a good story.
That's pretty good. I've never had someone pay to do a deal with me.
Like, I don't know how you're doing any of this, but we're gonna have to talk after the panel. Why don't we open it up for questions? We've got 9 minutes left, or I can just keep whipping questions at these guys.
When you're trying to develop proprietary deal flow, is your sort of first point of like where are you kind of building those first point of contacts? Are you going to trade shows and then sort of getting meetings with them there, or are you like speed dating like we do here, or maybe talk a little bit about how to get your foot in the door with folks?
You want to go?
Sure. Well, I think in Ignacio's case, it's probably a little different because he's very focused on a specific sector. But if you're looking at multiple industries and you're trying to develop a thesis in an industry and get to know those contacts, obviously first is learning about the industry, setting up calls with advisors, with bankers, doing proprietary outreach to people in that industry. Going to conferences, I think is great, and trade shows. It's just a question of how many eggs are you putting in that basket, right? If it's your only industry, you should definitely go. But if you have multiple industries you're looking at, you just kind of have to balance your time and resources with what makes the most sense. I think in some industries that you're have a deep conviction on, I would definitely do kind of everything possible, including attending in-person events to meet people and to kind of just gain credibility by being there and being around. So yeah, hopefully that answers your question.
Yeah, I will echo that. I invest a lot of time going to the trade shows. I also write a personalized letter to the founder, and I send it by FedEx because you always open the FedEx. I mean, and another thing that
Sorry, these are handwritten letters. I have to ask.
I even got one deal via fax, believe it or not, because some of these baby boomers, they really look at the fax.
This was in 1965. This is like recently.
That was well, I'm not that old. Come on.
Do you have a fax machine still? Like Warren Buffett.
No, that was 3 years ago. But still, the 2000s, yes, cool. No, another thing is in the trade shows, I always go into these networking events, and I'm not a party person, but you really get to see the people there of the companies, and they introduce you, and they refer you to the right person, because the problem is that most of the time you lose a big opportunity because you reach the wrong contact. And sometimes the wrong contact is the founder. Maybe you need to talk to the CEO first, and he will guide you and talk to the founder together. Hey, I talked to this guy. You really need to listen to it, because they receive a lot of phone calls also from sell-side advisors. I have a seller for you, so they're tired of wasting their time. So, yes, but as he said, I'm very niche specific.
Are there any deals through investment bankers, like a smaller investment bank, or a process that might be broken, or is everything just, like you said, the conferences, the faxes, the letters?
can take that one. Both, right? I find that when you talk with a seller that does not have an advisor or someone guiding them, you are playing the role of tutor, teacher. You're holding their hand, and then they're like, "Wait, should I trust you?" Right? And so it's, when you do go through. Now, we've all had experiences with brokers, and they're not really the most sophisticated bunch. But when you actually have an advisor that wants to, get a deal done, then they sort of take that off your plate a little bit, right? And so sometimes the proprietary deals, it takes a bit longer to materialize because you're gaining trust, right? You're teaching them about what it means to sell your business, and what's a seller note, right? Is that an option, right? And so being creative with the structure, kind of like all of us are. You talk to someone who's been in business for 30 years selling widgets, they don't really know. And when they don't have an advisor, it can be a bit tougher and more challenging. But if you have patience and it can go well. Did I answer your question? Yeah.
You've talked about investing companies maybe 50% and maintaining the legacy of the founders. And I'm wondering what techniques you're using to do that. Is it rollover? Is it employment agreements? Is it what other ways are you preserving that so that they will do the deal with you?
A couple of things. First, the first line of management. So before I close the deal, I put a plan and I ask the founder, what are the guys that are really important for you? And they know, and they will tell you, he knows. And I also ask about institutional relationships. Because, for instance, in healthcare, it's super important. Like, hey, I've been a supporter of the Optometry Association. I'm playing golf with these guys every Sunday. If you're going to kill my sponsorship, right? I don't like that. So I try to understand what is important for them. Sometimes are things that are not really that important for the deal. Some other things are more difficult. Like, for instance, when they say, are you going to fire anyone, right? So basically, my commitment is 1 year. During 1 year, I'm not going to touch almost anything, nothing. I need to learn. I just want you to hit your Evita, and I want you to have a TSA for 1 year, so I can call you. And in one of the platforms, because of the relationship and the TSA, he could make a very important call to a vendor because they wanted to have a letter of credit because I was new in the US. And he said, no, don't do that. Just give him 6 months. You will see that he will perform. So they help you. They help you when. So what is important for them is actually a very normal conversation. Is put a list of the 20 things that are important for you, for your legacy, and I will try to follow those rules. And if I see one that I will not follow, I tell them before I close. I say, this one, let's talk about it. How we can go around this? Because this is going against my thesis or something like that. Yes.
Awesome. Why don't we do like a quick lightning round? I'm curious, what has surprised you guys about the economy over the last 12 to 24 months? 10 words or less.
Maybe not a surprise, but slower sales cycles for portfolio companies. Maybe slower than anticipated, but yeah.
Price asymmetry, like just not being able to, sellers think their business worth way more, right?
Yeah, I mean, I think the bid-ask spread of sellers being, it's hard to let go of those 2021 valuations. and I think just kind of hoping interest rates would come down quickly, whereas investors, I think, quickly adjusted to the new regime. So I think that's changing this year, though. I think kind of that gap has narrowed quite a bit.
I would echo what my panelists have said, but also valuations from what we've seen have ticked down a bit, which is, provided more attractive entry multiples. So I think that's been a positive thing that we've seen in the market.
In my case, maybe the quality of the deal flow. I have seen more companies in special situations like distress. I don't do distress, so I have to pass. But I was surprised because the economy was not that down, but I could see many opportunities for that market, so that surprised me.
Yeah, I'll say mine was. It felt like we were in a recession, but no one was saying we were. And I think they still haven't said we were, but I think we were. So look, I think that's it. Please give these folks a hand.